Okay, thank you. Right. We'll start today's session. Last week, we talked about stocks, share market, and we rushed through many slides. Today, we will slowly look at some of them. Then we will move into today's heading, that is unit trusts. We are going to talk about unit trusts today. But before that, let me once again run through certain selected areas of stocks. We talked about this individual, Warren Buffett, and we said he's one of the brilliant value investor. He fundamentally analyzed shares and purchase, and over time, his share value has grown up to such an extent where he became the world's richest man. And throughout this session, we showed you bubbles, how many traps lies in the stock market, and how the SEC involves, how you have to analyze stocks. And for that, we have two basic areas. Okay. Now, this is one investor, his story. He started investing at the age of 14. And when he reached the age of 56, he became a billionaire. So from 14 to 56, almost 42 years took him to become a billionaire by investing in shares. Okay. So it took him 42 years to become a billionaire. But after that, his journey was difficult. Each and every year, he increased his wealth to such an extent, he became world's richest man many times. Okay. So, as a young person, he read a book written by Ben Graham, Intelligent Investor. He studied so many areas related to stocks, how to evaluate them technically, fundamentally, and finally, he became a follower of Ben Graham, Intelligent Investor. His selection was very simple. Remember, stock markets are fluctuating on day-to-day basis. Share price is moving up on day-to-day basis. But Ben Graham used to say, if you buy a plantation, a few acres of plantation, before purchasing the plantation, let's say you are going to buy a coconut estate. What are you looking at? Think and tell me. You read a newspaper, there is a block of say 10 acres of coconut estate situated in Kurnagala, and the value is 60 million. Okay. Now, before purchasing, what are the things you consider? Just tell me. Think and tell me quickly. You are going to invest in an estate, 10 acres. What are the things you consider? You are going to buy a land. Before buying the land, you are going to buy it for agricultural purpose. What are the areas or what are the things you consider before purchasing? Can anyone tell me some of the areas you want to consider? Yeah, you are going to make an investment. Before making the investment, you have to take the right decision. Okay. So the seller of this land says 60 million and 10 acres. Means what? 1 acre you have to purchase at 6 million. What are the areas you want to check before purchasing this land? Practically, think and tell me quickly without taking much time. Okay, you are looking at the type of the land, location, very good. Okay, you are making an investment, 60 million. What do you really want? After purchasing the land for 60 million, do you want to, exactly, you want returns. So this land is producing coconut, nuts. You want to check how many coconuts you can pluck per time, maybe once in 2 months. What is the price of a coconut? How much you can make out of this? So that is return. Out of your investment, what is my return? That's what you are looking at. Okay. After purchasing the land for 60 million today, are you going to evaluate tomorrow and check what is the value of this land tomorrow? Are you checking the value of this land on daily basis? Are you going to a valuation report? Are you taking a valuation report on daily basis of this land? Tell me yes or no. No. Right. That's it. That is value investment. You purchase something considering the future cash flow by making dividends and what will be the future value. But you are not worried about day-to-day market fluctuations. If you have purchased a car, you are not taking a valuation report on day-to-day basis and check the market value of this car. If you have purchased a land, you are not going to get a valuation report on day-to-day basis and check the valuation of this land. Okay. Throughout the life, you will check only when you are purchasing the land and when you are going to sell the land. Within this long period, what you are worried is about the yield. How many coconuts I am getting out? What is the price of a coconut? How can I sell them? What is the future trend on coconut oil? Will people give up taking coconuts? That's what you're looking at, not the value of the land on day-to-day basis. That's what the value investors are doing. But that is not what the technical traders are doing. Okay. Now I'll come with a practical example in Sri Lanka. When COVID-19 announcement came, immediately the share price came down. Share value of almost all the shares throughout the world came down. Now you are evaluating. Okay. There is a company called Central Industries, which is manufacturing PVC pipes. The brand is National. Okay, so you have Eslon, National, then you have EMP PVC, Kamal PVC, and so many other small companies. So these are the big players. Eslon, next National, Anton. So these are the brands available. Central Industries is a listed company. That means what? You can buy the share in the market. 2020, March, it was trading around 30 rupees and it fell down to 25 rupees. Will you buy this share? 1 week ago, trading at 30, now it's trading at 25. Will you buy this share now? We are in March 2020. 1 week ago, it was trading at 30 and it fell down to 25. Just 5 rupees drop. Yes, you are not buying. Why don't you buy? Yes, some are going to buy, some are not going to buy. Okay. Now, in order to evaluate whether 25 is worth buying, What are the factors you want to know? Before say yes or no, you must ask me some questions. What are the questions you should know about this company before buying or before deciding whether 25 is attractive to buy? What are the questions you must ask from me? A particular share price has come. Very good. Dividends per share. Right. Now my answer is they are constant dividend payer. Whenever they make a good earning, every year they make a good earning, almost like 50% of earnings become dividends. Okay, so 50% of earnings is dividends, and by that time they have earned let's say 6 rupees per annum. Earnings per share was 6 rupees. Means what? You can expect a dividend of 3 rupees. So when you buy something for 25, you can expect a dividend of 3 rupees for 25. What's the percentage? Is it higher than the FD rate? 3 divided by 25 into 100. What is the percentage? I want you to think and tell me. The percentage is okay. 3 divided by 25 into 100. Definitely it must be more than 10%, because if 3 is divided by 30, that is, yeah. So definitely that is 12%. What is the fixed deposit rate? Now you have certain amount of money, you have two options: to buy Central Industries share or to go and deposit in a bank. When a bank deposit is 5%, are you happy with 12%? When bank deposit is 5%, you can get 12% return. Are you happy with that, or you prefer bank? Yes, you are happy with 12%, which is higher than bank. Right. So that's number one. Then next you look at net assets per share. Normally, if this company is liquidated today, the company stops all the operations today and sell it out, you will get 60 rupees per share. Net assets value is 60 rupees per share. Okay. Right. Now that is the worst thing that can happen. The company cannot sustain anymore. Sell it now. When you sell, after paying all the liabilities, you being the owner, you will get 60 rupees per share. Are you happy? By spending 25 rupees, you can get 60. Are you happy? Yes. Right. Means what? Fundamentally, we can say yes to this share at 25. Okay. Right. 2020 March, you purchase this share at 25 rupees. Yesterday, almost after 1 year, what was the share value? So it went to 135. Yesterday, it was 125. Are you happy after 1 year? Say yes or no. Yes, you are happy. Means what? If you have spent 25 million, after 1 year, you can get 125 million. Okay. Whatever you purchased at 25, you can sell at 125. What is the percentage return you get? So you purchased at 25, your return is 125, 125 minus 25, that is 100, 100 divided by 25, that is 4 into 100, 400%. Are you happy with 400% annual return when bank return is 5%? Say yes or no. Yes. Is stock market attractive? Is stock market attractive?
Yes.
Right. Do you think the market will give this 400% return per annum on every year? Do you think market will be able to give you 400% return on every year? No, it's not. But no, it's not correct. It's not. But can you be happy with the dividend return? Now, biannual return up to now is 7. Means what? We can expect 14, rough calculation, 14% earnings per share. That means 14 earnings per share. That means dividend is 7. 7 divided by 25. How much? 7 divided by 25 into 100. How much? 28%. Very good. When market return is 5%, you get, without selling the share, 28%. If you sell the share, 400% return. Okay. Now that's what value investing is. Fundamentally, investing is. Now I'll tell you another company. Okay. There is a company in Sri Lanka known as Citrus Leisure. Citrus Group. Okay. Their code number is reef.n00. That is a chain of hotels. Citrus Vaskadua, Citrus Hikkadua, and Stewards by Citrus. 3 good hotels are with them. However, their earnings per share is negative. Dividend is not even heard for 10 years. No dividends declared so far. And their net asset value is declining. Due to COVID, hotels are not functioning well. Somehow they have managed to have some quarantine centers in their hotels. But we cannot see any symptoms of earning good return out of leisure sector. I think, yeah. Will you buy shares of Citrus? The code is REEF. Will you buy REEF shares? Others? Will you buy this share? Yes or no? No dividends per share. Net asset value is coming down. Earnings per share is negative. No signals of tourism growth. Yes, you are not buying. Why? Fundamentally, the value is not there. But there are technical traders who prefer to buy, make a sudden killing, and get out of this. Okay. So remember, there are shares which we don't buy, or the fundamental analysts don't buy. But these shares are purchased by technical traders who are not worried about the fundamental factors like what I said, net assets per share, earnings per share, future growth for tourism. They don't worry about it. They only look at share price. Okay, this is trading at 52 weeks low, and the technical is such they have reached the rock bottom. Now it must jump up. So they come up with nice patterns. Last week we talked about pattern reading, and sometimes they make good killing out of this pattern reading. Okay. Now I take some examples of such companies. In 2011, I said we ended the war, fourth Elam War in 2009, May. After that, we had a sudden quick growth of Colombo Stock Exchange. By 2011, we were facing a bubble. By now, you know what is bubble. And you all know every bubble has to burst. 2011, There were companies like this, Blue Diamonds. Okay, it was trading. We call them penny stocks. Penny shares means penny stocks. That means the value is very less, rupee value. Let's say the share price is below 10 rupees. So whenever retailers want to buy, they don't look at big shares. They buy at penny stocks. 1 rupee, 2 rupee now, last few weeks, bill, Downs Investor Limited. With reasons or without reasons, it's going up. Huge demand. Because the value is about 6 rupees. It moved from 3 to 6. 3 to 6 means almost like 100% gain. Penny stocks. With or without reason, with or without any fundamental value, these shares fluctuate. There was a company in 2011 known as Lanka Cement, trading around 5 rupees. All of a sudden, it started to escalate and reached 11 rupees within 1 day. On such, SEC makes inquiry. First, you stop or halt trading of that share. You stop trading that share. Then ask reasons from management. Is there any worthwhile reason of sudden increase? Then comes the answer. No, there is no such material fact to reveal. Means what? At times, certain share price goes up without any reason. On such, lot of small, financially illiterate people get burnt out. They buy shares without knowing why they buy. They believe it will go up. What is going up will go up. That's what they think. What is falling will fall. What is going up will go up. And they look at charts. Some are very good chart readers, but others just follow. Herd mentality. And with that announcement, Lanka Cement share price fell down. There were such occasions. We call them manipulations. People or some high net worth investors all of a sudden accumulate as much as available stocks secretly. Suppose a share is trading at 3 rupees and the available amount of shares in the market is 1 million. So by spending 3 million, I collect all these shares slowly. Then I make a story. XYZ, a huge investor is going to buy this company and he's going to turn it around and make a huge profit out of this. With that, since the market is illiquid, means less shares available in the market, I can easily make it go up to 6 or 9, 300%, 400% return overnight. Then I sell them back. We call them pump and dump. Okay. You pump up the share price, secretly collect, increase the price, sell it to the general public, get out. So these bubbles are artificially created. We talked about bubbles. Sometimes the bubbles are artificially created. I collect as much as possible within this stage. Then I somehow, okay, instead of really media getting attraction, I will give a party to a few journalists and give them certain reasons, sometimes give them the article to publish. So they publish about my company, which I have selected. Then the rest is artificially created bubble. Finally, when it reaches a huge value, I will dump it to the same general public who is now chasing this share, and I get out, making a huge profit. We call this pump and dump. Okay. Right. So these are the traps in the market. All of a sudden, your stockbroker would say, buy this share, okay, it will go up to this value, and you don't see any reason. Where the next day you find what he said is right. It's going up, escalating faster, creating a bubble. So every bubble creates good opportunities for few and many others will burn down. Continuously it happens in the market. Then I'll tell you another situation. Okay, let me talk it practically. 2009, after the financial crisis of the world, we saw a lot of finance companies fail. In Sri Lanka, without reason, certain companies belong to Selinco Group fell down. There was a crash. And Ceylon Merchant Leasing was not performing well. And People's Leasing had a discussion with the management of SMLL, Ceylon Merchant Leasing. By that time, People's Leasing was a specialized leasing company, a huge specialized leasing company. They preferred to purchase or acquire Ceylon Merchant Leasing, which is a listed company. By that time, People's Leasing was not a listed company. Now, one company is ready to sell. The other company is ready to buy that company. And it's a listed company. Share price was SMLL, Ceylon Merchant Leasing, was trading at 5 rupees. Okay. Now, share price of a company is decided by market based on various factors. Sometimes, as I showed you, Central Industries, a worthwhile share was trading below net assets value, below its earning capacity, below its dividends yield. So it's a good buy at 25 rupees. But in real, it's really worth more than 25. Okay. So SMLL, though it was trading at 5 rupees, there were negotiations by each party to buy. Finally, People's Leasing agreed to purchase this share at 25 rupees because of the fundamental value of this net assets and other potential is checked. Means what? General public is not aware that what is trading at 5 rupees is soon to be purchased by another party at 25. Okay. Now, People's Leasing management of People's Leasing Company, management of Ceylon Merchant Leasing Company, and the party who is involved in this discussion, who are doing this due diligence, the development bank and the related parties, knew what is trading at 5 rupees will soon be trading more than 25 rupees. Okay. General public is not aware of this factor, but the management, the top level of PLC, top level of SMLL, and the party who is carrying out the due diligence, the development bank, knows the value is 25. That means what? The parties who really know the value can buy from general public at 5 rupees today, and tomorrow they can sell at 25. 500% or 400% return overnight. So normally in trade stock market, you have T plus 2 or T plus 3. Means what? Trading day plus 2 other days to settle. So if I buy as much as possible shares of Ceylon Merchant Leasing today, I need not to settle it tomorrow. I'm given 2 additional days. Tomorrow it is definitely going to trade at 25. So I buy, let's say, 20 million worth shares without putting a single cent from my end. I am given 2 days to settle. So I wait for these 2 days without having a single cent, because I know tomorrow what I purchase will give me 400% return. Okay. Now, general public is selling to me without knowing the real value of this share. Okay. And I'm buying a huge amount to sell it tomorrow. Is this a fair trade? Is this a fair trade? Say yes or no. Is this a fair dealing? Say yes or no. Just type me yes or no. Market is not aware. I am aware. And I make the killing, huge profit out of this blind market. Is my trading a fair one? Okay. Now, this kind of activities are known as insider dealing. When I talk about central industries, I know this information by reading their financial reports, which is available for the general public at csc.lk, Colombo Stock Exchange.lk. Readily available this information. It's not a secret. Therefore, making a profit out of my knowledge by reading the publicly available information is not a bad thing. It's not unfair. But here, I know it because I involved in this transaction and I know it. Therefore, I should not make a profit out of blind market. So, if I do such an activity, that is illegal. Okay. So, they are punishable offenses. Right. Now, we talked about positive things, and you are very happy and you are eagerly looking at to enter into the market. Very good, fine. Think otherwise. You are here. You have evaluated the central industries shares and you purchased at 30 rupees based on your superb analysis. And you know you are purchasing something really worth. All of a sudden, Corona hit the entire world simultaneously. On 11th March, for the very first time, WHO said, yes, it's a global pandemic. By that time, we were experiencing 1 or 2 cases in Sri Lanka. All of a sudden, the government closed down the schools, followed by curfew. Food trucks vanished. People were hoarding essentials. You and I were not aware whether we will survive after 1 week, 2 weeks, 1 month. We ran through nice video clips sent by Sri Lankans living in Italy. They said, okay, your country, my dear country, our country cannot afford. Our hospital capacity is less. If we reach even 100 number of patients, that is the end of Sri Lanka. So that's what we were reading. And what were we watching within this curfew area, isolated area? Either dead bodies in trucks carried in Italy, a huge, large number, and Italy military is burying them. Ecuador, dead bodies were in houses, and you had to queue in graveyards. What was our thinking? The moment you contract COVID-19, that is the end of you. Definitely you are going to die. Our hospital capacity is extremely less. We are a poor country. We have only this much of ventilator machines, and if that exceeds, that is the end of Sri Lanka. Are you going to buy shares at that time? If you are holding 30 rupee worth, okay, you have invested 30 rupees in central industries, what is the best thing you can do? Sell it now and make it cash. You don't want central industries now. You want to live by eating the very few essentials because your companies close down. And you know your company cannot pay you if it continuously closed down. Somewhere here, government started to give 5,000. You know 5,000 is not that much huge amount to make a living, a monthly living. You are worried. So your best option is selling. Okay. Now, first we looked at what will happen if you purchased at 20, 25. Now I'm talking about if you have purchased at 30, what would have happened to you? What a huge loss you have incurred this period. Throughout the world, I show you how Australia and Sri Lanka behave. Same pattern. Means what? Investing is a seriously risky decision. Okay. But some were smart enough to identify that. Some or the great majority solved that. Okay. Now you can see some complexity of making investment decisions. It's not that easy. Okay. If so, it's better I leave my investment to be handled by professionals than I do it myself. Are you with me? Say yes or no. Investment is risky business. If I don't understand, better I let it be done by professionals than by me. Are you with me? Yes. Yes. Let's transfer this job to professionals. That professionals are known as fund managers. Their business is managing others' funds. If you have huge amount of money, then you can have individual fund managers. But basically, you and I don't have that much of money. We are known as retailers. Being retailers, what we can do? We can hand over our small amounts of excess money to unit trusts and let them manage it. That's what we can easily do. So today's lesson is unit trusts. We can invest in small amounts. We are retailers. And what we want to see professionally managed and giving us huge growth. We by now understand market is a good place where you can get superb investments and the return is extremely high. At the same time, we understand the risk. Higher the risk, higher the rewards. But I do not know how to manage this risk. If so, it's better to let some others manage it on behalf of me. So there are unit trusts. Anyway, just for your information, I'll give you a number known as magical number. Okay. So those who know logarithms, those who know compound interest and how to calculate, you can do calculations and check whether this is right or wrong. Anyway, 72 is known as a magical number. Means what? When 72 is divided by the annual return you get, it will show you how many years it will take to double your investment. Right? For an example, suppose the market interest is, fixed deposit interest is 10%. 72 is divided by 10. Then you get 7.2. Means what? It will take 7+ years to double your investment if it gets compounded at 10. Okay. Now 72, you said the market rate is 5. Means what? It will take about 14 years to double your investment. Now we have seen why some become rich faster and some will take years and years and never reach that. Now I told you, central industries got doubled or even fourfolds within 1 year. But if you just rely upon market interest rate, it will take 14 good years to double the investment. Suppose you are 24 years now. You have invested in central industries. When you reach 21 years, your investment has become 4 times. Okay. Suppose you have invested 10 million. Within 1 year, you get 4 times 40 million. 40 million return plus the capital 50 million. Within 1 year, 50 million, 5 times or 4 times plus the first one, 4 times. But you are 20 years, you just rely upon market interest and just went and put in a fixed deposit, which will compound. It will take 14 years just to double, just to make it 20 million. You invested 10 million, interest plus capital will be 20, and for that it will take 14 years. You have 20 years now. By 34 years, your investment is doubled. Okay. Now, you can't wait. Therefore, you try to invest. You do not know how to invest. Then comes the solution. Why not I go for someone who can manage it better than me? So our selection is unit trust. A unit trust is a collective investment scheme which pools, remember this word, pool, together into one account all the contributions made by many investors with a common investment objective. The money is then used to purchase a portfolio of financial securities. That's another nice word. You have 2 nice words here. Pooling. Lot of retail investors pool their money, collectively put their money. That is called pool, P-O-O-L. So in your answers about unit trust, you must use this word pool. Okay. So what is unit trust? It's a collective mechanism where retailers' investments are pooled together and invested in a portfolio of financial securities. Portfolio means what? Even if you invest only in stocks, you will invest in diversified portfolio. Means what? You are not buying only central industries. You are not buying only hotel sector. You buy shares of hotel sector, shares of plantation sector, shares of banking and insurance, shares of manufacturing sector, shares of construction sector. Diversified, which individually you can't do. Right? Now, why do you want to diversify? Tell me a reason. Why do you want to diversify your investment? When I talk to minimize the risk, very good. When I started to talk about the shares, very good, very good. Okay. I talked about ships. I have only one ship. In order to mitigate the risk and increase the return, what we did, shared them. Now I have a different portfolio. One ship goes to Africa, one ship goes to Australia, one ship goes to Sri Lanka, and they are bringing different products. I'm diversifying. Okay. Now, tell me, what are the positives and negatives you see due to COVID-19 for Sri Lankan industries? COVID-19, has it affected, okay, first question, COVID-19, has it affected all the industries in the same manner? No, no, no. Right. Now, certain industries, huge positive impact. Certain industries, huge negative impact. Do you agree? Yes. Yesterday, I wanted to purchase certain books I normally go to Crescat Vijitayappa and purchase books. I went to Crescat Vijitayappa yesterday and found what? My God. Our food court is no more. Some are removing the furniture of this food court. Then I went up. Vijitayappa, books were bundled, maybe waiting for a vehicle to take them out. Most of the shops are closed and even the furniture was removed. Means what? COVID has affected very badly for Asian Hotel Properties Limited, which is the owner of this company. Okay, so that's a listed company. So they have Cinnamon Lake and Prescott and Cinnamon Grand, yes. These hotels and shopping complex badly affected. But when I look at tile sector, what has happened? Since we are not importing, local manufacturers are thriving. Huge orders. When I looked at dipped products who were manufacturing rubber blouses, my God, super performing. Plantation sector performing perfectly well. Means what? COVID-19, the same impact has affected us differently. So if I have invested all my shares in leisure sector or the hotel sector, it's out. I cannot recover for a good number of years. If I invested all my shares in banks and finance companies, thanks to moratorium and many other issues, I don't see much of a movement in banks and finance sector. But I see a huge impact in manufacturing sector, central industries. Okay. Talawakale Plantation, Expo, Namunukula, and even Demo, now they are moving to agriculture. They are performing well. Means what? It's better to have a diversified portfolio rather than a concentrated portfolio. If I have concentrated all my investments in banking and finance industry, no return, much return at this moment. Even banks will not pay dividends. They have to look at the capital adequacy. But the plantation and the manufacturing sector will perform really well during this COVID. So if I have invested in different sectors, I'm okay. If I'm a fortune teller, then I would have sold everything and moved into manufacturing sector. But most of us are not fortune tellers. So it's better to diversify. Okay. Now we look at unit trusts. So they can easily have a portfolio. If I'm investing, I will select only one or two company. But when my money is pooled together with your money, then the manager of this fund can invest in lot of industries. So we call them portfolio. Now these are diversified portfolios. I can invest in shares, we call equity, debt instruments called interest bearing instruments like bonds. There are different types of bonds. I can go for money market or even international stocks. Now that's a diversified portfolio. When I come to equity, shares, I can invest like this. Just an example. 8% in manufacturing, 16% in plantation. Yeah, this is another sector thrived well under COVID. Everything became online. Now we are spending on data and listening to me. Dialog, Mobitel, SLT, all of them becoming earners. Now they are earning something which they did not earn earlier. Their data usage has gone up. Then I have diversified like John Keel's, SoftLogic Group, Aiken Spence, Haley's, Hotel and Travel. If I invested in 31%, my God, it's not good at this moment. Land and property. Now I told you about Prescott situation. So land and property may have problems. Now you can easily understand the need of diversification and why it is difficult for the individual like you and I. Therefore, we may go for pooled investments. Our money is collected and that collector can invest in different sources. Parties involved in unit trusts. Unit trusts involved three parties: unit holder or the investor, buyers of units. Now, for exam purpose, remember, if you asked, what does unit trust sell? Okay, what does unit trust sell? What do they sell? I'm buying something from them. What do they sell? They are selling units. They are not selling shares. They are selling units. Okay. Yes, they are selling units. Now I want you to think and write me. I'll give you 5 minutes. Write me, okay, answer to this. Why do you think it's better to invest in unit trusts than directly investing in stock market? So this is my question. However, if you have any other way of thinking, tell me that also. I'll leave you 5 minutes. Why do you think it's better to invest in unit trusts than investing in stock market directly? If you think, no, my way is I will directly invest in stock market than going through unit trusts, that is also accepted. Okay? I want you to think and write your answer now. Okay? I know that you are the layman. Okay. Others, I'll give you 5 minutes. Think positives, think negatives. Okay. Evaluate yourself, right? And write me a good answer. Whether I will directly invest or I will invest through unit trusts. Okay. There is no ready-made answer for that. Evaluate yourself first, who you are, what you want. Then think about, take about 4 to 5 minutes, think about it. Then start to write. Then we will discuss. Very good. I'm happy with the way you think. Now, okay, good. Okay. Now I'll ask you a question. Okay. How old are you? Tell me an answer. How old are you? Just tell me an age. Others? Right. Right. Good. So all of you are between 18 to 22, somewhere like that. And I'll classify you as young. I don't hope you will not get offended. You are very young. Right. When is the good time to take risk in investment? When you are old or when you are young? When is the best time to undertake risk? When you are old or when you are young? Very good. Very good. So, when you are young, you can definitely undertake risk and learn. And undertake risky adventures in your life. Investing is a risky adventure. Okay. Remember, in order to become a very successful investor, you need 3 P's. Excess cash. You don't have that at the moment, I understand. Excess cash. Education. Now that's what you are looking at by coming to this kind of classes. Now this is the third one, which you will take with time. But you will grow old without experiences if you don't undertake adventures. Am I correct? You will just grow old. You will just grow old. Yes. So when you are young, get experience on things. Not the things that will destroy forever, like drugs. No. But get the experience and exposure to the things that will make you learn. Right? Now I'll just share you something personal. In year 2006, I was doing my MBA and we were facing Elambo then. I told to my colleague, who was a DGM in a finance, in an insurance company, Damini, I have learned this subject called portfolio management 3 times. University, chartered, SIMA. Now I am learning in the same subject for the 4th time, MBA. But I have never invested a single cent in stock market. He was 1 decade or more older to me. He said he is sharing the same thoughts like me. We have learned again and again, but we have never experienced. Then I asked Damini, what is the point of learning something which you are not practicing and never practicing? Then he told me, Nandana, I'm handling the portfolio of our insurance company. Then I said, okay, fine. What you're handling is what you're paid for. That's your job. But what are we doing in our personal capacity? Are we afraid to undertake a risk and happily do it for others? Then I started a CDS account, Central Depository account, and started trading shares. Next week, I went to Gamini and said, Gamini, so maybe 2 weeks after that, I said, Gamini, I started an account with my stockbroker and I purchased 1,000 shares. Somebody asked me, what is the company? I said, Overseas Reality, Overseas Reality Company. And Gamni asked me, do you know about this company? I said, no. Overseas Reality's Twin Towers and Havelock City. The moment the first bomb blast in Colombo, the share price will collapse. I have purchased the share at 21 rupees and I have spent 1,000 rupees. And the Navy commander, Clancy Fernand, died out of LTT bomb and the share price fell to 15. And it did not recover for more than 5 or 6 years. But I learned a good lesson. Before buying a share, I must know what is this share. Okay. Thanks to that experience and his experience made me change. Today, when I talk about shares, I talk with my or the hands-on experience. And I expect you to do the same. Okay? So I'm not asking you to get into gambling. Right? I showed you Warren Buffett had got into market at the age of 14. Right? I got into the market in 2006. The beauty is you will experience it. Then you can tell like me, okay, I purchased John Kill shares at rupees 15 year 2008 December, and by May 2009 I sold it at 350 with a massive profit. I purchased Baira Farms at 10 rupees and it fell down to 8 due to flood. But 2011 I sold it at 400 rupees. Okay. So that's how you will experience. Okay, right. So in your whatever you wrote, I'll accept it. But remember one thing you need, that is experience. Right. So the parties involved in unit trusts, you have unit holder or the investor who is buying units. That's one. Number two, the fund manager, the professional guy who manage, the makers of best investment decision and prepares annual reports and declare dividends. They are managing your fund. Then you have a third party, the trustee. Okay. Now, if you hand over your hard-earned money to me, I'm not worried, my dear. That's not my money. Why should I worry about someone else's money? So I'll buy even penny stocks. If they go up, fantastically good, I'll give you a good return. If they fail, that's not my job. So there is trustee, the custodian of the unit trust, and to ensure that the fund manager, that's me, acts in the best interest of the investor. Yes, in accordance with the trust deed. Act as the watchdog to protect investors' money. If I play fool, then this watchdog talk to me. Why do you do this? So there are three parties: the investor, the fund manager, and the trustee. These three parties create the unit trust. Trust deed. So that is the deed, the document. Okay. So the trust deed is the legal document that lays down the terms and conditions under which the unit holders' money is to be invested. It also spells out the investment objective and the responsibility of the fund manager. Okay. So like, okay, when you sign up the credit card document, we just sign it, but huge set of conditions are there. I don't read. When you sign a lease agreement, the same. Housing loan agreement, the same. I think the only document that you don't have any conditions set up on is your marriage. When you're signing that, yeah, no conditions attached like a credit card or a housing loan. Here, there's a deed, a document like that. When you sign, you are given what are your activities, what are your responsibilities. That's a legal document. If you breach it, you can end up in courts. So the concept of unit trust consists of three parties: unit holder, fund manager, trustee, and the deed is the document that is covering these three parties, connecting these three parties. Unit holder gives money to the manager, who manage and administer, and the trustee hold all assets, safeguard, and distribute the income. So remember that there are three parties involved in unit trust. If you asked who are the three parties involved in the unit trust, you must be able to give that answer. Okay. Now, with age, you will get something called experience, but not the inactive people. Inactive people will just grow old. Okay. Now, there was a very powerful company those days called Vanik. Vanik Bank and Vanik Unit Trust, they were very popular. One of my friends approached me and said to buy units of Vanik Unit Trusts. And I purchased 5,000 rupee units of Vanik. Later on, Vanik collapsed. But these units are still there, and it was transferred into another fund, Ceylon index fund or something, and my money is still there. Means what? It's protected. Okay. Later on, someone from NDB Bank approached me, NDB Wealth Management, and I invest certain amount. When I wanted to construct my house, I took it back. In this unit, they promise amount higher than the bank deposit, and the money will not, the value will not go down like stocks. It will always remain constant, and in addition to that, you get an interest. Gilt-edged funds. Now, what are the types of unit trusts? Means what? There are a lot of areas where unit trusts can go and invest. One is gilt-edged funds. Means what? They invest only in government securities. Gilt means gold. Gilt-edged, golden edged. Now those days you are given physical certificates. When you buy government securities or when you buy treasury bills, treasury bonds, you are given a certificate, and around the certificate there is a golden color printed margin. Therefore, that is known as gilt-edged securities. All the government treasury issued securities are known as gilt-edged. So definitely their interest rate is very low, but security wise very high. So those who are afraid to risk, whose risk appetite is very low, they prefer gilt-edged securities. So the unit trust only buy treasury bills. They only buy treasury bills. That is known as gilt-edged fund. You are given dividend quarterly or semi-annually or annual basis. These funds are invested in gilt-edged securities. That means government treasury issued securities. Have different maturity profiles, maybe short-term or long-term or medium-term. Gilt-edged funds differ from bond funds because bond funds invest in corporate bonds, government securities, and money market instruments. Gilt funds stick to high quality, low risk debt, mainly government securities. Our understanding is government will not default. They will always pay. Therefore, risk is very low. When the risk is very low, what is the result? Higher the risk, higher the return. What is the reverse? Lower the risk, lower the return. So treasury bills provide you very low interest rate compared to others. But still, those whose risk appetite is very low, they can prefer to go into gilt-edged securities. Number two, income fund. These funds invest in fixed income security that provide a higher return than gilt-edged securities. So they have a mix: corporate bonds, treasury bills, bank deposits, and repos, repurchase agreements. We'll talk about repos later. For the time being, just remember that's another option. These funds regularly pay out a dividend either on semi-annually or annually. Now we have two types of funds we have discussed so far. Gilt-edged fund. They invest only in government securities and the return is low. Your dividends are paid semi-annually, annually. Income fund. Now they move slightly higher return and undertake slightly higher risk because they mix with corporate bonds, treasury bills, bank deposits, and repurchase agreements. Okay, now this is what repo is. A seller, okay, it's very simply like this. Okay, you are in need of cash and I have cash. But in order to give you cash, I need a security. You have a chain, a golden chain. You take over this chain and hand it over to me, saying, I will repurchase this chain from you at this interest rate. Okay, so there's an agreement. What is that? I'll give you money and take your chain. But that chain is not really sold to me forever. Our agreement is you will repurchase this gold chain from me again. If you fail to do that, I'll sell it to someone else. But your intention is to take that golden chain again from me. From your point of view, you have not sold it. You have come to an agreement to sell and repurchase. Therefore, it's repurchase agreement. Now here, the security, this time not the golden chain, but the government security. That's the collateral of the security. Against that, money is given. At maturity, the chain is handed over, money takes back with interest. Here, it's not the chain, but a collateral known as a treasury bill or a treasury bond, or maybe other some government security. So that is known as repurchase agreements. In short, we call it repo. So you have two types we have discussed. Number one, gilt-edged. Number two, income. Number three, balanced funds. First read it. Aim is to provide the investor capital appreciation along with a regular return. Fund consists of equity and fixed income securities. Equity means shares. Fixed income security means debt. So you have fixed equity instruments and debt instruments. The proportion vary depending on the market condition. Okay, the proportion is changing. A dividend declared mostly on annual basis where capital appreciation takes place in medium term. Okay. Balanced fund means what? You balance between debt and equity. Equity means shares. Now this fund invests in shares. This fund invests in debt instruments. What are the debt instruments? Interest bearing instruments like treasury bill, treasury bond, corporate bonds, fixed deposits. Okay. They invest in that. They invest in shares as well. Last week, I told you with some examples how the interest rate and the equity moves, the direction of their movement. Let me see. Yeah, that's it. When the interest rate goes up, share market comes down. When the interest rate comes down, share market goes up. And it happened continuously. Now, last week, we exceeded 7,000 ASI. So Sri Lankan stock market index has reached more than 7,000 again, while the interest rate has fallen to the lowest. So our prediction is if it has fallen to the lowest, then it must reach the highest. That's a prediction. No one can say, yeah, that must exactly happen, because there are many other variables that will affect to that. But at a glance, debt is moving one side, equity moving the other side, right? So this is why here we call the proportion vary on the market condition. Okay, if I am putting all my excess money in fixed deposit, I'm a fool at this stage. Okay, if I have put all my money in equity somewhere, say 2013, then I'm a fool. So you must balance. How do you balance? Looking at the market condition. If the market is going to give higher returns to fixed deposits, like here, better to sell and move into fixed deposits. Like here, if the interest rate is on downward trend, sell it and move to shares. Okay, you sold here, got in cash position, waited for a few weeks and moved into equity. And sold here, waited until here. Then moved to fixed deposits, then sold it, waited until here. If you can balance that, you are a genius investor. So balanced investment portfolios are really good. You will get capital appreciation plus regular return. Indexed funds. That's another easy, lazy way of investing. Okay. Now I'll tell you some simple things. Sometimes it's very easy to follow a leader without much understanding. Okay. Now for an example, what are the colors you see in company logos? What are the colors you often see in company logos? Think about Coca-Cola logo. What are the colors? Think about HNB. Think about LOLC. Think about People's Leasing. What are the colors you see? Say LOLC. What are the colors you see? Only two colors. What are they? Blue and white and LOLC. Right. LB Finance. What is the color in most of the advertisements? Right. Okay. People's Leasing. What are the colors you see? Only two colors. White, red, and blue. Okay. Right. Now these are the colors you often see. Think about Anchor. Think about Coca-Cola. These are the colors. Okay. People get attracted and meant to different colors. It is normally said, other than Caterpillar, the earth soil moving vehicle manufacturer, no one other has selected brown as a logo color. Okay. Think about khaki, the policeman's kit. Just imagine a policeman is wearing a white uniform. What do you feel? Okay. So without much knowledge, you can easily follow what the leaders are doing. You need not to learn psychology and look at the color combination and how color and attraction change over time and what is the relationship between gender. You don't worry. You need not to think on that. Just follow what the leaders are doing. Now you said blue is seen in logos. Very good. Now think about blue colored, fully blue, dark blue cake comes to your plate, dark blue plate of rice, dark blue ice cream. Do you like them? Say yes or no. Means what? Means what? Colors mean something to us. That's a subject. But you need not to go into that details. Just follow the market. Okay. These colors are good for logos. These colors are not good for edible things. Likewise. I'll tell you one very simple example. Those days, we were not experiencing electricity like this. And almost in every household, you had bottle of kerosene. Like this one, you see a bottle of kerosene kept on the floor. Those days, the color of this liquid was orange color. Lot of toddlers, small kids were admitted to hospitals for drinking kerosene. All of a sudden, government changed the color. Not orange anymore, blue. After that, no admittance to hospitals. Small children are no more mistakenly drinking this liquid which is blue in color. That's what. Okay, so without moving or learning much, you can easily follow something else. Indexed funds. Invest in the same proportion of a particular price index. For an example, in Sri Lanka, S&P SL20, Standard & Poor SL20. So in Sri Lankan stock market, we have two indexes. One is all share price index. The other is S&P 20. Means what? 20 selected companies' behavior is represented in this index. Fund manager can't find investing into the same stocks. So S&P has selected only 20 company stocks and the fund manager will buy only that index. It's very simple, like following the leader. They look at how a particular index is created. So that index is created by 20 companies with a certain criteria. So the fund manager only buy that company. Means what? If S&P moves up, my share investment moves up. If S&P falls down, my share portfolio falls down. Very simple. So this index fund was created by an economist known as John Bogle. You will almost never find a fund manager who can repeatedly beat the market. It's better to invest in an indexed fund that promises a market return but significantly lowered fees. Okay. You need not to be a super class investment manager, super class manager. Just select a fund and invest in the same proportion. You will never beat the market, but you will float with the market. John Bogle. If you have trouble imagining a 20% loss in the stock market, you shouldn't be in stocks. Okay. Indexes will go up, indexes will come down. So your market portfolio will go up and come down. And over time, the index will naturally go up. So your professional fee is less and you can enjoy that. But we can never say the index will go up forever. So if you cannot see a 20% drop in your investment, then better not get into stocks. You can go for fixed deposits, where you will never see a drop, either a return or a vanish. Investors as a group cannot outperform the market because they are the market. Okay, so these are quotable quotes of John Bogle. Investors collectively cannot beat market because they are the market. Got it? You and I, being the investors, decide the price of shares. So you and I cannot collectively beat the market. One individual can, but not collectively. Okay. And from that theory flows the reality. Investors as a group must underperform the market because the cost of participation constitutes a direct deduction from the market's return. Okay. What really happened is we underperform the market. We cannot beat the market, but we will slightly move below the market. Why? We have to have some other costs like the professional managing fee. which will reduce our return. That is essentially is all you need to know to understand why index fund must provide superior long-term returns. Okay, just by understanding that, you will confine to one index and you will get a good return over time. You look at CSC, we have a good chart. Let's see this one. This is all-share index of Sri Lanka. With time, it has gone up. Forget other things. If you have started here, and if you draw a line, definitely on an averaging line, it will go up. It's going up like this. Okay, so you need not to beat the market. Just float along the market. So that's what index fund says. Okay. Money market funds. Now we have talked about 5 types. What are they? Gilt-edged, balanced, indexed, income. Now come the 5th type, money market funds. Invest in short-term fixed income securities like treasury bills, bank deposits, commercial papers, asset-backed securities, and repos. So we are only looking at money market, not the capital market. Money market means where the instruments get matured within 13 or less months, maximum 1 year. That is the understanding. These funds are used to park temporary funds of individuals and companies. These funds are liquid like savings accounts and offer higher returns. Dividends can be paid more than once within a year. Okay. What are the types of funds? Quickly tell me the answer. What are the types of funds in unit trusts? You heard them now. What are the types of funds? Gilt-edged, and you know that they invest only in government securities. Index funds, like what John Bogle said, S&P. Then you have income funds, that's a mix. Balanced funds, money market funds. So you have 5 types of funds. Remember them. Money market funds. Advantages of unit trusts. Okay. Now, if I directly invest in stock market, if I am young, if I have an understanding of accounts, if I can gather more knowledge on market, economic, political factors, then I'll thrive in stock market. But those who are not young, suppose I get my EPF fund at the age of 55 or 60. I'm not going to live a long life like a person who is 20 years old. Therefore, my risk appetite is less. Then I'll prefer to go to fund, unit trust. And if I don't have any understanding on accounts and finance, and I'm a doctor by profession, I don't have time to look into annual reports and read financial statements on day-to-day basis. I have a lot of other activities, but I have money. Then I'll hand over my money to unit trusts. Okay. So the advantages of investing in unit trusts. Number 1, diversification. If I invest as a retailer, and if my investment value is very small, I can invest in only 1 or 2 companies. That's why many small investors, retailers, get into market and just buy penny stocks, which are not in a position to declare dividends, and they often get fooled. Therefore, if I have good lot of money, I will diversify. Since I can't do it, I'll pool my money in a unit trust and get the benefit of diversification. Many investors lack sufficient resources to establish an adequate diversification on their own. Okay. Many investors lack sufficient resources to establish an adequate diversification of their own. As I mentioned, in any given time, you will find some performing companies and underperforming companies. Like now, due to COVID, we see hospitals are doing well, telecom and cellular phone companies, manufacturing companies, chemical companies are doing extremely well. Okay. Then tourism and banking, they are not doing much well. Tourism is worstly hit. Means what? If I have money and if you have purchased only shares of tourism, you have lost your money by now. Therefore, you have to diversify. Okay. Now, if you think about CSE, Colombo Stock Exchange, there are hotel sector related shares. One very good example is Asian Hotel Properties Limited, AHPL. AHPL belongs to John Keells, and their hotels are Cinnamon Grand, Cinnamon Lake, and the Crescat. Okay. From 2009 to 2019, they have continuously paid good dividends. In 2009, the share was trading at 10 rupees. If you have purchased that in 2008, even below 10 rupees, whatever it is, suppose you purchased at 8 rupees, and after 2012, they were paying like 4 rupees dividends per annum. So if you have purchased at 8 rupees, 50% return. And that was the case almost for a decade until Saharan attacked. Then Saharan attacked, subsequently COVID-19, 2 good years lost to hotel sector. Okay. But it does not mean hotel sector is always bad. One good decade, hotel sector was performing extremely well. That's where you have to diversify. Another very good example is Apico Group, Richard Pierce Group. In that group of companies, you have very good diversification. You have K Gold Plantation PLC, which is a listed company, which owns the biggest rubber estates in Sri Lanka. When the rubber price comes down in the world, they cannot pay a dividend. Company fails to perform well when the rubber price comes down. They have another company, Richard Pierce Exports, which exports manufactured things out of rubber. Okay, so you have rubber mattresses, then a lot of rubber related products. When the rubber price comes down, the raw materials of Richard Pierce Exports goes down and you get super huge profit. Okay, so if you have, let's say, Richard Pierce Group, they have invested in 2 different companies. When the rubber prices comes down, they make a huge profit out of exports. When rubber price goes up, they make a huge profit out of K Gold Plantation. Once K Gold Plantation declared a dividend of 25 rupees per share. Richard Pierce Exports, on the other hand, last year made a dividend of 22.55 per annum. But this one is not making much dividend. Balancing. One is manufacturing, the other is planting raw materials. Okay, that is diversification. So if you have money, you can buy both K Gold Plantation and Richard Pierce Exports, and you will always be in profit. That's diversification. Funds with variety of objectives. Different types of funds are created for different investment objectives. So investors should have no problem finding funds that meet their objectives in terms of return and risk. Yes. Some are low risk takers. Suppose I am 80 years old and I have a retirement fund and I am very sick. Means what? I cannot undertake unnecessary risk. I am very happy with government securities. What I am really worried is security of my investment. Because at the age of 80, I can't lose everything and restart my life. Okay. So my risk appetite is very different then. When you are 20, your risk appetite is different. At the age of 80, I don't want to get exposure and learn new things. Number 3, record keeping services. The management company maintains and administers the records of shareholders' activity for the given year. This is a great convenience for the investors. That's there. I have met many investors who don't keep records. They only remember what happened yesterday. But over the period of time, how much have you really invested? How much have you taken as a return? Have you reinvested? They don't have a clue on that because they don't keep records. So most of the people I have met, they don't keep record on their own activities. For such people, unit trust is very important. Professional management. Fund managers who are knowledgeable about investment and they have good track record of performance and high integrity, etc. There are people with high integrity, good people, and they know the subject. There are people who do not know what they are doing. They just come and dump their money. Very recently, a young lady came to sell a product known as Igini at or something, Igini milk or something. Then when I talked to her, I found she is working for a network marketing company. Then I said, okay, you are not actually selling a product, but you are part of a pyramid scheme, which she finally found, yes, that's what's happening. Then I told her what is a pyramid scheme and what has happened to her. Later on, I asked, okay, you are really good at marketing. What have you done earlier? Then she said, earlier I invested in stocks. Then I asked, okay, so what happened? She said she has invested so much and she lost so much. Finally, she had to sell half of her mother's property to get out of loans. So there are people who are not really studying what they are doing. All of a sudden, there are some nice words. Okay, when you lack jobs, you look at the advertisements and you consult people. You look at the type of people who wear official uniforms and talk English and believe they are leading a good lifestyle. And you join them without knowing, you fall into traps. Pyramid scheme is such a trap. She has now fallen into that trap. But before that, she has fallen into investing in stocks. Okay? And she has fallen into a trap. In order to get out of the trap, she has sold half of her property. Okay? You must know what you are doing. Okay? So that's where, if you don't understand that, don't do it directly. Go for the professional management and look at the integrity of that professional person. High liquidity. I told you that. I once invested in NDP Wealth, and when I need money, I took it. Highly liquid, unlike stocks. Affordability. You can buy units even in small amounts, like 5,000 rupees. So that's there. Now, we talked about a very nice word, integrity, high integrity. That's something very rare by now, but still it has a value. In your leisure, please look into this Madoff investment scandal. Okay. Now, when I say certain people lost their hard-earned money by investing in stocks, and in Sri Lanka 2011, we had a bubble. A lot of Sri Lankans believe, yes, Sri Lanka is a very bad country to live and invest and that and this. No, the world is same. Just 2 days back, we saw how the democratic people behaved in United States. People are people. Human beings are human beings. They behave almost in same pattern wherever they live. So I believe gypsies need not to say, I don't know why. Yeah, that's happening everywhere. Okay, whether in Sri Lanka or not. You can fall into traps in stock exchanges throughout the world. Okay, learn the subject. Madoff investment scandal was a major case of stock securities fraud discovered in late 2008. In December of that year, Bernie Madoff, the former Nasdaq chairman and founder of Wall Street firm Bernard L. Madoff Investment Securities, admitted that the wealth management arm of the business was an elaborate multi-billion-dollar Ponzi scheme. Okay, such high-calibered people. Okay, such high-calibered people. They ended up in legal cases and sent to jail. In your leisure time, please study this Madoff investment. So when you are handing over your hard-earned money, look at the integrity. It is very difficult to look at the integrity of a person. Madoff scam, biggest scam by a human being, $65 billion, and it affected to thousands of investors. I'll tell you one thing. As a small kid, you must have listened to a lot of stories. Okay, I think you have heard the story of Pied Piper. Can you remember that? Just tell me what is that? Without taking much time, I have only 5 minutes more. Pied Piper. Have you heard that story? A town affected by rats? No, my God. Okay, so there is a town affected by rats, and there comes a magician who said, I have a flute. When I blow this flute, yes, when I blow this flute, all the rats will come to me. And he did it. And all the rats followed him when he's playing the flute, and he took them out and put them somewhere. And the town is now free of rats. He came to the mayor and said, I need this much of money. And the mayor refused. Then he blew another tune. All the children were taken and put into a cave. Pied Piper. Okay. So whenever you hear the tune, okay, stock exchange is going to outbid the market. Market rate has gone forever low, and the Colombo Stock Exchange will perform its extreme best this year. Please don't fall into the trap. Okay. Then you have heard the story of Cinderella. Am I correct? Yes or no, quickly. I'm running out of time. Yes, right. Cinderella goes to party, and she was given one instruction. What is that? Get out of the party before. Get out of the party before midnight, 12 o'clock. Right. Right. Before midnight, before 12 o'clock. She gets into the party, okay, with fake things. With fake things. What are they? Her cart is a pumpkin. Her horses are wax and everything. Everything is fake. But the party is such an attractive activity, and she forgets to get out before clock struck. And she somehow managed to get just in time. So if you are a trader, look at when to get out. Before midnight, you have to get out. Okay. So when the market is going up, 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 we get extremely happy. We forget to get out of the market, and all the fake things will be gone. Okay. Shares which has no value may go up, up, and all of a sudden the clock struck. The time will be told, and everything fake will be vanished. Right? Carts will become pumpkins. Horses will become rats again. Before that, get out. Okay, right. So this one, Madoff. Okay, he made all this. Right. They were sentenced 10 years, and one suicided after 2 years. Okay. Just read this. There are a lot of people who are ready to play out with your hard-earned money. Now, we came up with this word. It's a Ponzi scheme. Multi-billion Ponzi scheme. Now, what is a Ponzi scheme? A Ponzi scheme is a fraud investment operation that pays return to investors from their own money or money paid from other investors rather than from actual profit earned. As simple as that. Okay. Now, suppose I start up a company, right? I would say I'm doing an investment company. What I'll do is I'll pay you 10% interest per annum, and the minimum deposit you have to make is 100,000. I'll pay you 10% per annum. What will you do? You will come to me and pay me 100,000. I do nothing. I just keep your money in my locker, and after 1 month, I'll take 10,000 out of your money, your own money, and pay you interest 10% per month. Now, what do you experience? This guy has promised me 10% per month, and he paid me 10% per month. How did I pay it? Out of your own money. Now, you are very happy. Okay. So, you tell your friends here, don't go to banks. They are giving 5% per annum. There is a guy who will pay you 10% per month, 120% per annum. And it's real. I did it. I got my money. Then your friends are interested. They also come to me paying 100,000 each. Now next month comes, I pay you another 10,000. You have given me 100,000. Okay. Now out of your 100,000, 90,000 is remaining with me. Next month comes, I'll pay you another 10,000. 80,000 of your money remains with me. I do nothing. I don't have any business to get 120% return per annum. I don't have any business idea. But I pay your money back to you. But with that, you introduce me more and more people. Now what is happening? More and more people join to me, believing I'm such a genius. I have a business which pays more than 120% per annum. And finally, when I have gathered enough money, I vanish. What I have been doing? I am paying your money back to you, and finally, from others' money to others. At one point, I vanish. That's my business. So that is Ponzi scheme. Today, this Ponzi scheme appears in a pyramid style. What is pyramid style? I start a business and I sell some fake items. I'll recruit 6 people down me, and I will ask each 6 people to buy some unheard, crazy item. Once it was Mondial, a wristband called Mondial. And I would say when you wear this wristband, your immunity level will go up and you will not be affected by COVID-19, and pay me 50,000 and buy this special wristband, Mondial. So you pay me 50,000 and I'll give you this wristband. And your duty now in return, bring me 6 people. The more, let's say you have introduced me 3 layers down, money starts to accumulate in your individual account as well. Okay. So I'm giving you something worth less than 5,000 and I'm taking 50,000 from you. So what happened to you? You have to do the same. You have to bring 6 people down the line. Means what? I stand in the first line and below me you, Likewise, there are altogether 6 people. That 6 people brings another 6 means what? Now I have 36 plus 6 down me. That 36 brings another 6. So the third layer you have 216. When it comes to 13 layers down, they have to bring 13 billion people. What is the population of this world? What is the human population of this world? Any idea? What is the total human population of this world? Yeah. It's, let's say, for easy calculation, 8 billion. You cannot go down more than 13 steps down like this. Entire world population is not enough. But those who get into pyramid fails to do this simple mathematics. And they believe they can become billionaires overnight. Yes, I will become a billionaire the moment I gather more and more people down the line. But remember, this line cannot go even 12 steps down. The world population is not enough. Okay. Now, pyramid scheme is the only scheme in the world where you pay to get a job. Pay me 50,000, then you can do marketing. Now it appears in so many nice terms, and you call it network marketing and not pyramid anymore. Okay. The company would charge high entry fees. That is the only company where you have to pay first and get employment next. On all the other companies, you first work for 1 month. After 1 month, you will be paid. And this is the only company where they don't create any value. All the other companies add value. But this company is not adding value. The only other company that is not adding value is antique sellers. They can't, or they don't add anything value to what they hold. All the others add value, transfer to the next level. So this pyramid scheme naturally ends. Okay. Now let's just look at what we have been doing so far. Okay. We talked about financial intermediaries. What is that? Then we selected few topics per day. Insurance. We did. Venture capital. Okay. Then we said in order to have a very good venture capital running, there must be well-established capital market. Then we did stock market. After stock market, we found, okay, it's not easy. Then why not we hand that job to professionals? So came the unit trusts. Okay. Now you know who are the unit trusts, what is meant by unit trust, what are the 3 parties involved in unit trusts, what are the advantages in investing in unit trust, plus now you know some disadvantages as well. Okay, so we have covered different topics. Each and every topic you have learned something valuable for exam as well as for life. Okay, let me just talk on this. This is illegal. From time to time, we have seen central bank advertisements talking about these kind of activities. But when one is gone, they reappear in another shape. From time to time, a lot of people get into these traps. This exact format is continuing. I come with a fake product or a product which is not valuable at the value I'm charging from you as entry fee. And you have to bring me 6 down the line. That foolish activity has been there for a very long period in Sri Lanka. And it's still continuing. Okay. And they recruit very good people who can talk, who can deliver speeches. And they create such a nice environment, like a superb class working environment, to where the kids which the young people admire. and in return you are promised so many things. Okay, you are shown always nice PowerPoint and so many other presentations how your living standard will go up, but they end up losing, the great majority end up losing everything other than accumulating debt. Okay, so be mindful of what is happening in the market. You have, from one side I showed you how much you can grow with investing in stocks. Investing is different from savings. Okay, that side I showed you. Then at the same time I showed you how even that can be difficult. Then I showed you another path, unit trusts. Then I told you are young, study and get into learning habit. Okay, so with that I'll end today's session. On 22nd January or 23rd January, please check because I may have a revision on that day. Anyway, we'll have classes next week. Next week I'll tell about the situation on 23rd January. Okay, with that I'll end today's session. Thank you.